In a sense, it's quite like what we've already said about the banks. When you're bailing out countries, you're really propping up failures and you're preventing them from making the adjustments that they need to make to move forward on a sustainable basis. And I think that we've seen bailout after bailout. We're going to continue to see bailout after bailout because we just can't accept that the model we were pursuing through all these years of expansionary credit-driven boom, none of that's going to work anymore. That we are living in kind of a different age, that money is not just joshing around as just quite as freely as it was before, and that we do need to cut back, that we do need to reconsider the scope and scale of the government, the amount of services it provides, the way it provides them, and the amount that it spends in general. Now, the Eurozone bailouts are really more political than economic. I mean, I think we should acknowledge that fact up front, and they're largely designed to prop up the euro. And the euro has, I think, become more of a political project than an economic one, and so much pride is attached to it, so much political capital, that it's almost inconceivable that the EU would let it fall apart. And that's the real driver behind the bailouts. But it's not about fixing the problem. It's about putting a sticking plaster over them and hoping they'll go away. Now that's a very short term, that's a typical bureaucratic approach. Let's not deal with this and hope that in a few years' time it's all been sorted out and we don't have to do anything. Now, that's just not going to be the case, I'm afraid.
Let's pick up on this thought with Max Kaiser. One wonders where these bailouts will end. Are European leaders, as Jeremy Batson-Carr suggests, rather Tom Clarity suggests, are they simply kicking the can instead of addressing the real fundamental issues that have to do with the euro?
Well, I see a couple of issues here. First of all, when you're talking about the EU, you're talking about Germany. And to the extent that there's trouble in the peripheral economies in Europe and that the euro might be trading down, this benefits Germany. You know, Germany is playing a double-edged game here. And if they can keep the euro cheap by panicking over the euro, they've got a great export advantage, and they are now I think the second biggest exporter in the world, and their economy is booming. Secondarily now, if you look at what's happening in countries like Ireland and the so-called bailout, the dirty little secret is that institutions like the IMF are bankrupt. So how can a bankrupt institution bail out a bankrupt country? Well, the way that they do it is that they pledge the collateral of Ireland as the assets to borrow more money to do essentially a hostile raid of Ireland. Because Ireland has assets. They've got farmland, they've got energy, they've got an educated population. This is a hostile raid of a country, pledging the country's assets for the loan vis-a-vis the IMF to come in there and take over the country. So again, IMF is bankrupt. They have no business trying to take over a country like Ireland because the IMF, which is mostly the United States, and we know that the United States banking system is technically insolvent. So what are they doing trying to take over a country? They themselves are broke.
Jeremy Batson-Carr, does the medicine then work when it comes from such quarters that, as Max Kaiser suggests, are essentially broke? Can they fix the problem?
Well, I think that if I hear your question correctly, I would argue that there is a potential solution for the periphery of the Eurozone, although European politicians haven't reached that solution yet, which is a source of great disappointment, but perhaps we shouldn't have had our hopes raised too high in the first place. Essentially, what one could do would be to use the European Financial Stability Fund, properly funded, although therein lies an issue, of course, to buy the short-dated debt of many of these peripheral countries who are facing a major crunch over the course of the next 4 weeks, particularly Portugal, of course, and therefore enable them time to get their economic house in order. At the moment, of course, such a severe burden is imposed on these economies that there is no possible way the money will ever be returned and default will happen. Some might argue that why not default on the basis that it's the banks, as we've been talking about, who have been doing much of the speculation, and if they have to take a haircut as holders of peripheral European bonds, well then so much the better.
And why shouldn't some countries default, Tom Clarity? Russia did it in the late 90s. Argentina did it in the early years of 2000. And it isn't just the smaller countries of Europe that are affected. We're talking about Greece, the Irish Republic, Portugal, possibly Spain as well, but countries like Italy, I just look at staggering numbers that I have here. Italy's public debt as a percentage of its GDP is 118%, and that's just Italy, but there are many more examples relating to the economies of France, the UK, the bigger economies of Europe.
Well, of course, I mean, this problem is very widespread. It's almost universal if you exclude those countries that have significant oil and natural resource reserves like Norway, for example. So, yes, this is a problem that's all over Europe, all over the world, indeed. But I think that the option of default, while superficially attractive, it really strikes me as an easy way out, not a realistic option. Because you could say, oh, well, yeah, sure, forget about it. The government's got all these debts, well, it can just cancel them. The banks who've bought these debts, well, it's their problem, they should have known better. But the problem is, when you really look at it, one of the major holders of government debt all over the world, whether it's through the banks or whatever, are pension funds. So if you talk about countries defaulting on their debts, you're talking about the value of people's pensions crashing. You're talking about people who've made good faith investments over many years suddenly finding they have no money. You're then looking at an even bigger burden on the state in future in terms of its state pension costs and so on. So I'm really not sure that it's a realistic option. Maybe in extremis there are circumstances where it can't be avoided and it does become the lesser evil. But I don't think we're there yet. Certainly not in the UK, probably not elsewhere either. Maybe Ireland is kind of a marginal case, to tell you the truth. But I think we've got to get beyond thinking that there are easy way outs. That this is where we can just do this and then the problem will go away and we can start again afresh. We have to look at this the same way that a household or a family would look at it if they were in financial trouble. They think, what are our outgoings? What do we absolutely need to spend? What are the bare minimum of things we can get by on? And let's cut spending back to that.
All right,
and I think if governments took that approach...
Sorry to interrupt you, but let's get to Max Kaiser, because we just have barely 30 seconds left. If there was such opposition, Max Kaiser, as you've been saying, to these financial policies pursued in Europe and elsewhere, these bailout packages, these austerity measures, why aren't we seeing more serious protests on the streets?
Well, a couple of points. First of all, 2 minutes ago, of course, one of your guests was suggesting that public sector pensions could be sacrificed. Now he's saying that, pension funds must be preserved. Of course, there's duplicity there. And the point should be made also that the stability fund and all the packages to keep these bonds rolling over is highly inflationary to the currency. So the people who do have money in these pension accounts are going to lose their money through inflation that's being generated to save these funds to begin with. So strategic default, the sooner the better, because you want to start all over from scratch if you want to stick to a capitalist system. We are seeing a gaining momentum for uprisings, and they're becoming more effective, as we saw in Holland over the weekend. And whether it's Wisconsin, Ohio, Cairo, people are in the streets to do what they should be doing, which is taking back their wealth that was stolen from them, taking back the jobs that were stolen from them. So the global insurrection against banker occupation is building momentum.
Max Kaiser, Jeremy Batson-Carr and Tom Cloherty, thank you all very much for being with us on this edition of Inside Story. And thank you for watching. We welcome your comments and suggestions as always. You can email them to us at insidestory@aljazeera.net. From me, Rida Fakhri, and the team in Doha, thanks for watching.